Hello, everyone, and welcome to Value Capital Funding's podcast, Insights into Better Business Financing. My name is Jeff Kornfeld, and I'm one of the principals here at Value Capital Funding, a family-owned and operated commercial financing and debt restructuring firm located in Boca Raton, Florida. We're here to bring you timely information and tips to help you navigate the vast and sometimes confusing world of small business finance. We invite you to contact us to discuss your business's financing and debt restructuring needs at any time. You can reach us by phone at 800-944-6280 or on the web at valuecapitalfunding.com, where we also index these regularly produced podcasts in case you've missed any of them or just want to listen again. So, without further ado, let's start today's show. Today's topic is businesses reopening, James Bond, and your lenders. It's no secret that the COVID-19 pandemic has created a series of challenges that many businesses must carefully navigate since they've reopened and tried to get back to normal times. None of these challenges are more pressing than dealing with existing business loans, leases, missed payments, and even defaults. In today's episode of Better Business Financing, we'll outline some of these current conditions and provide additional insight into these vital issues and maybe even show you how best to use the information to your best advantage. I'm excited about that, folks, and I hope you are too. Okay, here we go. When the COVID shutdown began, as many of you know firsthand, most lenders issued moratoriums on normal debt repayment and even debt collection activity, and began issuing payment deferrals to customers on a very large scale. Several state governors early on also issued executive orders reducing or eliminating a lender's ability to collect debts during the crisis. As a consequence, many business owners breathed a huge sigh of relief and incorrectly felt as if their financing companies were in their corner. With most states reopened now, and many of the executive orders from those states' governors expiring, many lenders have already started to aggressively pursue business debt collections. However, the chain of events that started due to the crisis has created a series of challenges that business owners must carefully navigate as the reopening gains steam and we all try to return to a more business-as-usual climate. The regulatory environment is fluid, so whether your lender relationships are with locally or nationally based firms, it is critical for you to stay current on federal, state, and local regulations. Currently, there are 4 states and the District of Columbia that are prohibiting involuntary repossession on assets that were used for collateral in a financing transaction. These 4 states are Massachusetts, Maryland, Illinois, and Alaska. Importantly, a number of governors of other states, while not issuing official executive orders, have asked lenders to voluntarily cooperate and not to repossess collateral for secured business loan transactions. There are other relief efforts underway in some states and local jurisdictions to place further restrictions on lenders. Most notably, in California, AB 2051 would have restricted repossession activity on collateral used for business loans until the end of 2021. Unfortunately, from the small business owner's perspective, this initiative was defeated. However, many think there will be more attempts to get relief for business owners, but of course there are no guarantees. Finally, potential federal restrictions still do exist. Efforts have been made to formalize restrictions for repossession of collateral used for business loans during the debate around each of the federal stimulus bills so far. With discussion of an additional stimulus bill currently underway right now, one has to assume that those efforts will continue. But where will that leave the unsecured borrower, the business owner who had to use MCAs or merchant cash advances or other high-cost financing? Are those secured, backed by collateral, or are they unsecured? In most cases, the documents you sign do take a general lien on all business assets. So, doesn't a lien mean your financing was secured by that collateral? How will your merchant cash advances be treated given potential changes in the legislation? Now let's talk about these business debt collection firms. The current situation has resulted in some collection firms shutting their doors completely. Why is that? Simple. Because many were operating on very thin profit margins to begin with. So this sudden wave of collection moratoriums was the straw that broke the camel's back. They're back. And some of them went or soon will be going out of business. This changes the landscape, and now we'll show you why it may have just changed the landscape for the better. For you. You see, the combination of fewer debt collection firms and the expected surge in demand for collection and repossession services across all industries, across the entire country, is likely to result in capacity shortages in some markets. Follow along with me here, please. Many financing firms that you may already be dealing with will find it more difficult, to get proper attention for their collection cases and will likely need to allocate more resources, which is code for money and time to manage the issue than in the past. That makes sense given the COVID-19 pandemic, right? There are several factors in this COVID economy that are likely to increase the costs of collections for financing firms. First, the imbalance between supply and demand that I just mentioned will very likely increase cost pressure. Additionally, we are seeing an increase in consolidation activity among collection agencies, especially in certain large markets. They are merging with each other to get better scale. Over time, this trend will translate into less competition amongst these firms who help your financing firms collect money from you, which will likely up the fees they charge for their services. And finally, collection and repossession agencies themselves are experiencing increased costs relating to COVID-19. When it comes to collection efforts relating to secured transactions, the proper handling and storage of business assets recovered in a debt repossession does cost more money. Many are also charging higher fees to offset the cost of the required PPE or personal protection equipment that they now need. Also, there are higher labor costs associated with a slower collections process, even as it relates to collection activity for unsecured financing transactions like MCAs and other high-cost debt that may very well be on your books as we speak right now. This all makes sense, right? It's a very fluid landscape. It's also very likely that the COVID-19 situation will result in an increase in collection and repossession-related lawsuits filed by customers against their financing firms. To be certain, we are already seeing evidence of a strategy emerging by attorney teams we deal with to target the issue on our clients' behalf, especially in the jurisdictions where restrictions were issued and are already in place. This is why it is vitally important to stay abreast of all regulatory developments where your business operates. The next several months will be challenging to say the least. So, it is important to make sure that your internal team and your debt restructuring partners are ready to be proactive on your behalf. Are there any James Bond fans out there? Because I'm reminded of that great phrase by the insane villain, Elliot Carver, in the James Bond thriller Tomorrow Never Dies, when he said, "Never let a good crisis go to waste." So, how can you use this COVID crisis to your business's advantage? Listen up, folks, because this is where it gets super interesting. For all the reasons I just mentioned relating to COVID-19 crisis, the power to restructure your business debts has never been more in the hands of America's business owners and less in the hands of the financing firms who debit your bank account on a daily and weekly basis. This is the time to follow Elliot Carver's advice and never let a good crisis go to waste. So, if you have high-cost debt on your books, whether it's wildly expensive merchant cash advance debt or any other high-cost debt, now is the time for you to address it. You have the leverage. You have the power. Why? Because your lenders don't want to chase you down in court or use a high-priced collection agency to do it. Consequently, there are some of the best payment deals we've ever seen to be had now in the restructuring arena. Listen, we're not telling you to profit off the pandemic. It's a tragedy on a global scale. That being said, though, as debt restructuring professionals who look at these scenarios all day long, we're trying to respectfully convey to you that despite the fear that you may have, the trepidation you may feel, even the embarrassment that may nag at you. Now is the time to address your business debt, to lower your debt payments, and to breathe new life into your business. So take a deep breath and hold it for a second. Now exhale slowly, because I'm here to tell you that it is going to be okay. The COVID-19 environment has just worked to your advantage, at least when it comes to restructuring your business debt. Because what's that other saying? When life gives you lemons, make lemonade, right? Well, here's your chance. Take care of yourselves, your families, and your loved ones. And then, please take care of your business, because America needs our small businesses healthy and strong. We need you and yours healthy and strong. We are lowering our clients' debt payments by an average of 40 to 60% while preserving their business and personal credit. So, if we can play any role at all in helping you restructure your business debt, please do keep us in mind. All inquiries are, of course, 100% confidential, and we can generate a customized offer sheet within 24 hours that will show you your new, dramatically lower payments. And to help small businesses nationwide, we've instituted our restaurant gift card program. We're really excited about this one. If we generate a customized offer sheet for you, whether you become a client or not, we will give you a $100 restaurant gift card to a restaurant of your choosing in your local community to help out that hard-hit sector of the COVID economy. It's a win-win situation for us all. Just click the link you see here to learn more. That about wraps it up for today, folks. Thanks for listening to Value Capital Funding's podcast, Insights into Better Business Financing, with me, Jeff Kornfeld. We invite you to contact our dedicated group of professionals to discuss your business's financing and debt restructuring needs. You can reach us by phone at 800-944-6280 or on the web at valuecapitalfunding.com. Value Capital Funding, we don't accomplish the impossible, we only accomplish what seems impossible. We hope you'll tune in again next time, everyone. Bye for now.